You can pay your children up to $12,000 per year. And you can write off as a business expense, which...
Okay, so I've been seeing a ton of videos just like this one and more trending on TikTok lately. The basic premise is that you can give your kids $12,000 and they won't have to pay taxes on that money. And because the money came out of a parent's income, they can lower the amount of taxes they pay in a year as well. So what is going on here, and is this legal? Let's break it down. Most of you know that the US has a super long and super complicated tax code that decides what exactly gets taxed in the US. The IRS, or the Internal Revenue Service, imposes those tax rules in the United States. The tax rules affect everything from people to the things we own to the income that we make to our businesses and the things we actually buy. Like I said, these tax codes affect businesses, which is exactly how parents are able to get these tax advantages for their kids. Basically, a parent creates a business, their child becomes an employee of that business, and then the parent starts paying that child roughly $12,000, which is all tax-free. So if it's that easy, why isn't every parent in the US doing it? Well, simply because it is not as easy as it sounds. Basically, in order to do this, your business needs to be one of three types: a sole proprietorship, a single member LLC, or a partnership LLC. These business types, employees don't have to pay some federal taxes like Medicare and Social Security. If your business is not one of these, like a corporation for instance, then you'll have to jump through a bunch of hoops like creating a brand new business that just handles your payroll just to get these tax advantages. And that can get pretty messy. But hypothetically speaking, let's say you are able to create the right business with no problems at all and that you actually do have kids that you want to employ. Your work doesn't end there. You're going to have to go through extensive paperwork and record keeping with your child like you would with any other employee. That means your child is going to have to fill out a W-2 and an I-9 form. W-2 form tells the IRS how much earned income needs to be withheld for taxes. An I-9 form verifies that they can actually work in the US and in that state. Even though you might not be paying some federal taxes, you may still have to pay some state taxes. But again, let's say you're able to get through all of that. Next, you need to assign your kid a job and a wage, and those two things need to add up. For instance, you can't hire your 8-year-old as a hole puncher and pay them $100 an hour. And you also can't hire your 7-year-old, pay them $20 an hour, and have them be the office manager. The IRS may think that's a little fishy, and they may investigate further to see what these people actually do for their income. And you need to make sure that they're actually doing the job that you gave them, so this will involve actually tracking their hours and tracking their progress. And the last thing you need to do is just make sure that you're following labor laws within your state. Some states only allow minors to work a certain amount of hours or work during certain times of the year. Oh, you'll need to follow that too. But you have to do this to a T, or else the IRS may think you're committing tax fraud. Tax fraud basically means that the IRS thinks you're knowingly avoiding taxes. Before you do any of this, remember, I am not your personal tax professional, so make sure you check with a certified tax professional and your lawyer before doing any of this. That way you know it's legal. This all assumes that you have a business, but it can be even harder and more complicated if you don't. While yes, this is technically legal, the better question you should ask yourself is, why would you want to do this? Before you go through all of this, assess your goals and figure out why exactly you want to do this. Then meet with a tax attorney to see if it's legal.